Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Wednesday, January 3rd, 2006. And looking at this daily chart of the S&P 500, you wouldn't think much happened. However, we had quite a volatile day for the first day of trading in 2007. I think I just said 2006 a moment ago. But this trend line we've been looking at was tested once again, but it closed above it after probing intraday below it and also getting below these lows from last week. So let's take a look at a 30-minute time frame so we can see it a little bit more clearly. You can see that we had a very sharp sell-off, and it came down just below last week's lows, but then was able to manage to close back higher into the range where it's been recently. So realistically, what happened today? Almost nothing. The S&P 500, as measured by the spiders, were down 14 cents. And as I said over the weekend, this market overall, it's just time to go slow. I've been saying that the market is acting tired, and that breaking below 40.75 would bring a lower low. We didn't close below that 40.75 level, though, but we've been looking at this lower high, and a close below 40.75, 140.75, would bring us with a lower low, and then I was looking for a possible test of the 50-day moving average down near the 140 level. So the market, nothing changed. It's just it's in a range here, and until we get a little bit more evidence of a trend, then it continues to be the right thing to do, which is to go slow in here. There's just really no edge being aggressively long or short. So that's the S&P 500, and looking at the Nasdaq 100, the Qs here, where the heck is it? 1, 2, 3, 4 Qs. Nasdaq 100, we were looking at hopefully this market getting back above the 43.40 to 43.50 level that has been resistance here over the last week and a half after being a strong level of support for nearly 6 weeks or so. And the market did gap up and then pushed through that level, and it looked like it was going to be pretty convincing, possibly, as we did have a rising 5-day moving average as well. But then the Fed came out and had to say some things that spooked people, so the market sold off, made a lower low, and now I think this market's just going to have to kind of settle in here or see if it's going to settle in here or what's really going on. But basically, since these moving averages crossed about 4 weeks ago, I've been saying that's a sign of a more neutral market, and that we probably need to consolidate the gains that we've seen since August through time. And that's exactly what's going on in here. Now, if the market continues to break lower, we were looking at another area, possibly down near this 41.50 level, and that'll be something to keep an eye on now. But now that, again, we've got this level in here that might be resistance, as 43.50, 43.60, let's call it. If that level continues to act as resistance, then I think buyers may get a little frustrated in here, and we could see a deeper pullback. But for now, there's nothing suggesting that. We do have a continued rising 50-day moving average. However, we have lower highs and lower lows, with this prior level of support at 43.50, 43.60 now acting as resistance. All in all, it tells us it's time to, or it continues to be time to be very cautious in here, trade lower share size, and again, officially, I'm more neutral on this market than anything else, and you have to take it on a stock-by-stock basis. The semiconductors, same thing here. They had a quick, sharp sell-off intraday. They did manage to recover somewhat, but back into this continued mess. Now it looks like we're again going to have this area near 33.65 as a potential level of resistance, and perhaps a rally up towards that level, and then a failure below 33.50 or so would be a good opportunity to get short these Qs, because the daily trend is, like I've been saying, clearly lower here, declining 10, 20, 50-day moving averages, lower highs and lower lows. I think we could be in for a test of this 32.25 level coming up here over the fairly near term. The mid caps, MDY, these guys continue to trade sideways, holding above the 50-day moving average. But we've got the 10, 20-day moving average crisscrossing, which means indecision in here. So not really time to get aggressively long or short. The stocks that I had mentioned for potential plays for today were, first of all, Airspan Networks, and I'd suggested buying this stock above $3.71. Right here, there was an opportunity, if you were quick, to catch it at 372. If you were one of the people who were able to catch it at 372, I think at this point you want to raise your stop to $3.68 in Airspan. GHDX, Genomic Health. This stock does not seem to want to pull up the chart. Hold on one moment. Okay, but here we go. Now, this is the stock we were looking to buy above $18.80. Should have been purchased in there. At this point, I'd say raise your stop up to $19.26 for GHDX. So that puts us up about 46 cents. Pretty good little move so far in there. The better trade of the day, I think, was this Dynamic Materials with symbol BOOM. We've been watching BOOM for months now and have caught a few trades in it on the short side, and we got another good one here today so far. What I was looking for yesterday, or in last night's commentary rather, was a rally up to $28.25. The high was $28.33, and then the idea. So here's that 25-cent level right here, and you can see the high was 33 cents. Then to sell the stock short below $28.15, which occurred right in here. Our stop was going to be at $28.60. Obviously, that never came into play, and the stock dropped down to our target of $27 a share. And at that point, I suggest that you always cover at least half of your position at the target. And just because the bigger picture is so ugly in here, I still think it's got the potential to reach $25 a share, but you ought to lock in part of those gains. And right now, I had suggested your stop on the balance be at $27.35, and that's where I think you ought to continue to keep your stop in BOOM. JCOM, symbol JCOM, JCOM, if I could type right. JCOM, what we were looking for in here was a similar type of play. First, a rally up to $27.50, and then to sell it short below $27.40. Well, that never occurred. The stock was strong, probably squeezed some shorts. No reason to be involved in that play at all. Should not have traded it.